Good morning, everybody. Welcome to Phoenix Trading Strategies, free trading room where strategic knowledge and information allows you to trade successfully. For those of you that are here for the first time, welcome. For those of you that are back, welcome back. It is going to be a very interesting Monday. But before we continue, let's go to the disclaimer. Disclaimer. Futures, stocks, and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in futures, stocks, and forex markets. Don't trade with money you can't afford to lose. This website representation is neither a solicitation nor an offer to buy, sell futures, stocks, or forex. The representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, let us go to the calendar and see what we have today. All right, so we have this morning labor market conditions. We had Canadian permits, Centix investor confidence for Europe, which was bad. Economy watcher sentiment for the yen, which was bad. Not really that much important fundamentals per se in regards to how the markets reacted. So there must be something else that's triggering this sell-off. Now, we identified this sell-off during the Asian session at approximately, this is 5:40 my time, so it's about 8:40 p.m. in the afternoon. And this is on a 20-minute. Look how long they took. I mean, this took hours. That's 40. That's 20, 40, 60. Oops. 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7.5 hours before this thing dropped. And then, of course, it dropped during the European session like a stone. Now, the question is, will it continue to fall? That's a good question. I think yes, and I think that our entry is right here. They came back to retest here, but I think that it's getting ready for the fall. And they announced, for instance, as they came down, this is where they held it. And then they came up again here. And then they came up again here and failed, and here. And now, of course, normally after the third time, it's usually a sell-off. So I'd like to say that from this point on, it will come down. Now, we could go to the 30-minute. The 30-minute, I think, would be a little bit more clearer in this regard. Yeah, panic is causing the sell-off. I agree. And the fact that they weren't happy with the numbers. So here they announced, came down, pushed it all the way down, came back, let's see, failed here, came back, failed here, made the move up, but then here they came up pretty aggressively, didn't fulfill to come down, pushed it up again here, couldn't fulfill, came down, pushed it again here, and they failed. And right now I'd say it's a complete and utter failure on this end, and it's going down. But let's look at the 10-minute. Maybe the 10-minute gives us a little bit of a... Also, the numbers on Friday weren't that great. Don't get me wrong. You know, give it a minute. The charts are coming up. Yeah, see, it's already begun. They just pushed it down very aggressively. I'm afraid that what they're going to see, I don't want to get into this trade right now because even though it has probably 1 or 2 or 3 more candles, it may be short-lived, a 40-point trade, and that's okay because it already came down 200 and some points, which was extremely aggressive. So I'm thinking we're going to wait for it to come back down. Once it fails, then take it back up, because they're announcing long. They've been announcing long for quite some time. Here, here. They did it here, but failed at it. Here, they couldn't pull it off, and they came back here again, failed. They did it here again, and so the volume divergence from here is here. But, like I said, my only problem is that they may use the trend dots right here, these dots that are right below, as a support level. And so I just don't want to be caught on the wrong side. When it was at 1952, I would have been a little bit more comfortable. But see, that's what I'm saying. Now we have the first power dot formed. So what will happen is that they more than likely will come back up and retest. When they retest, that's when it'll be interesting, because that's when we will see how aggressive they're going to be around this area. Now, if they fail around this area, then at that point I'm interested. Right now I'm not interested. I'm just speculating. So it's a matter of holding off. And if we look at the S&P, I'm sure we'll find the same thing. It's a little too early right now to jump on, only because the stock markets here in the US haven't opened. So I'm thinking that they're going to set up for it. And the setup isn't quite there yet. It'll be interesting though. It will be interesting. Give it a minute for the charts to come up. Taking a little bit longer than expected. It'll come up. Give it a minute. Gold made a nice move to the upside. Come out, wherever you are. Okay, here we go. Yeah, see, S&P is showing the same thing. Now, here's the interesting part. See how they put everything into this one right here? The fact that this formed is interesting, but more importantly is that they started here and here and could not make it. This will be the last attempt. And then from this point, that's when it'll become interesting. Now, normally I would get into a smaller time frame, but this is the play right here. And let's take a look at the volume, because this is where it's going to get interesting. If we're able to pinpoint this off of the S&P, then the Dow will just fall like a stone as well. So let's take a look at the volume. And remember, the way that we view volume is different than everyone else. Alright, so they really went all out on this one with orders. 7,446 on the buy, 3,876 on the sell, difference of 3,570 bullish volume. Now, it doesn't necessarily mean that with that amount of volume, they were going to drive liquidity up. That's the problem. Now here, it dropped, of course, but I want to see this one here and this one here. Yeah, see, this had more volume. Normally when they do that, they'll come in very aggressively. And I'm not too concerned about this. This has to bump up just a tad before it comes down. Here's where the volume began. And this was quite a bit, actually. And so now, of course, it's on the downside. So now, as an example, we will take this short, and it should come down because they broke through here. So this one, the way it opened, went up, tested, failed, and of course now should come down from there. But only because we do have volume divergence. The question is, how low will it go? Will they come back to retest 1845? Can't really say, See, here's a pivot right here. I'd like to say 1845 and 3/4 would be the price target. And I can see it happening maybe to 1847 and 3/4. Now that's not a bad trade. That's a pretty good trade on the S&P. 3.25 points from our entry, or yeah, almost 3 points. That's not bad. That's a pretty good trade, actually. And it may be worse for them. We just needed to pinpoint an entry. And I knew they were going to come up and retest. That was something that was inevitable. Now the volume on this one was interesting because they pulled back immediately. See, there's no negative volume here. It's all bullish to the hill. And then here they pulled back significantly. And now, of course, we're here and the volume is increasing very rapidly. You see 38.85 on the buy, 49.97 on the sell. A difference of 1,000. I would have expected a bigger move by now. That's why I'm somewhat concerned about the whole thing. Because unless I see this thing drop like a stone, I'm not going to be that keen on it. Now they could be setting up right now for the market open, which will be negative, and of course it'll bring it down. But if they come down prior to the open within the next 13 minutes, that's when it becomes interesting. So let's see how this one plays. It'll be a very interesting trade, actually. Because if they go down 3.25 point from where we are, that should be enough of a retracement to either set up for a reversal or continue in that trend. Now, if it continues in that trend, that means it'll probably go down to about 1841. And that's a pretty big drop from there. I don't know if there's enough steam in the market to allow such a correction. That's the only thing. They're really wanting to make people wait, aren't they? Now normally, we will usually have, once they initiate a direction, it's usually a 6 candle run in the smaller time frames, this being a smaller time frame. So this thing closes below that. And see, here's where it was interesting, because when they retraced and they broke below this pivot right here, that's when it became interesting. Puts them in a whole new range to come right back down here and potentially here, because there's nothing in between. One second. Okay, let's see what happens from here. No, nothing. They're going to make us wait for the open. Okay, power dot number 2 and a pivot. We're good. That is very good, actually. They're still struggling with the fact. Now, here's my only concern right now. They came down here. They did it again here, set it up. They did it again here. They failed here. And now it's to the upside to some degree. This candle will define. But it's not really set up yet. This is still... I don't like the formation here, especially when the volume here was slightly higher than this candle to the downside, but we didn't have price action follow through. That is a problem. However, what we did have is we did have the buyers concede with their point of control here, but now we need to see a reaction in this candle. And we do have the candle opening and settling below the trend dot right here. So this could be a head fake right before the fall. This is where it gets interesting. did imagine them coming back up trade test. Now, normally, when they do a thing like this, we usually look to the left to see where it began, to see if they did announce a short. So even though this is a bullish candle, it had negative volume in it. They announced it here. Here they didn't, but the point of control is at the bottom of the candles. Both are buyer and seller. Here, they kept the bullish tone, but nothing extravagant, even with that type of volume. And then here, they had a slight pullback, nothing aggressive, but it was more of a setup saying we're going to go short. Then here, they increased their volume, threw everything they had at it, failed, and then this one came in and pulled it right back. Now, normally when that happens, if the second candle is aggressive and opens below the close of this candle, after the first power dot, then we know that we're in a bearish trade. And they did increase to the downside their volume. So now this one is the one that's really going to define control for us, because now that they're trading and settling below the zero line here, this, even though this is trading inside, the fact that it's gray, it's trading means it's trading inside the previous candle. So this one should be very interesting, because this one, if there is an increase in volume to the downside, then we should see more liquidity drive it down. So just because you have volume doesn't mean that they're going to add more liquidity to drive it down. That's the ultimate question. And since they've already been down there, I'm estimating they got to come back and retest before they go long. Question is, where are they going to retest? I like 1847 3/4, quite honestly. Like I said, it's one of those trades where it's short, sweet, to the point, nothing extravagant, but enough to put a smile on someone's face. Here they come. Let's see, let's see. Now, if this candle closes below the trend dots here again, then that's also a good sign. That's not a bad sign. And even if it stays bullish as a bullish candle with negative volume, that means that the next candle is going to fall. So if they went bullish and they had negative volume, that's actually a no-no. So let's see, let's see. I know it sounds boring, believe me, sometimes it is, but there aren't much trades out there right now. I'm noticing on the market analyzer that nothing's really setting up. Two minutes. See, we should have seen a reaction by now, and we haven't seen one. But we are seeing momentum build up in the volume. They're building it up. One minute left, and we'll see how the market opens. question. All right, here it goes. And there it comes. Now again, I don't expect this to be a big trade, let's be honest. We should have had a bigger reaction. The fact that they opened up so aggressive right now is not a good thing. And I don't like the fact that they've made attempt to reverse. So this thing, for the amount of volume that just came into this thing should have sank aggressively. And it's not. And what that normally means is there's a reversal in play. And I don't want to be on the wrong side of the trade, so let's see how effective this move is. And the fact that you have a purple volume bar at the bottom, or magenta, that means it is a high frequency, a wide bar. They are throwing everything at this, and you can see it in the volume. 12,300, 400 on the buy, 15.6, 15.8 on the sell. You know, that's pretty aggressive for what we are not seeing. And like I said, I like 47 and a quarter. And I don't see it going down any further. And this thing should have dropped like a stone right now. I mean, we should have seen a reaction like there was no other. We're talking bloodbath. And it's not there. And because it's not there, I'm going to step out of it very shortly. Let's see if they make the run right now. If they make it now, it'll be interesting. But if not, then yeah, they're not going to do it. They're going to attempt to do it, but not quite as aggressive. See, look at the volume on that thing. I mean, they're throwing the kitchen sink at it, and it's not moving. Now, when they do such a thing, that means they do set up for a long trade. Just that this isn't the one. Let's see if they push it down to our level. Another point. Come on, take it another point down, because that's where you're going to settle if you even go that far. Yeah, see, it's not happening. So when you don't see a trade play out with this type of volume, what you do is that you step out of the game and you wait. And you wait for them to give you the signal, because it looks like the signal is going to change, which is something that I don't like to see. And when that happens, and see, here's another sign. You see how the trend stop, it basically is telling you bullish. Well, it could say bullish all day long, but the problem is that for the amount of volume that they've injected into this thing should have dropped like a stone. So we're going to see how far it drops. And I can assure you that probably what's going to happen is we're going to see a reversal of the most effective kind, which will be this way. And when that happens, then we have a trade. But right now we don't have a trade. See, look at all that. 148. I mean, that is a tremendous amount of volume. Here it goes. Finally, they hit my mark, 147 and a quarter. But look how long it took, and look at how much volume it took. No, it doesn't take this much volume for it to go down 3 points. That's just absurd. So we'll let it come down a little further and wait and see where they hold. See, right now they're trading right around that pivot. Now, it doesn't necessarily mean that I'm going to jump on this trade right here. I'm not. I didn't like the way it played out to begin with, but I'm going to hold and wait and see what they're going to do. Now here's interesting, because here's where you can actually go to the 5 minute, which normally I don't like to do, but it's interesting. I'm on Pacific time in the US. So let's give it a minute. It's the volume indicator, just takes a lot of data. Give it a minute. We're almost there. Give it a minute. We're almost there. $8.46. Oh, $8.43. Oh, wow. They came down like a stone. I just didn't like the way they built up the volume in this one. But I think they overplayed themselves. And so we're going to wait. This could be, see, the 5 minutes said short this thing and short it here. However, they're coming in too fast, too aggressive. So there's a retracement trade in this. It's alright. We'll let them play their little trade. There's the opportunity we've been looking for. Watch. See all that volume that came into that thing? Way too aggressive. Now, normally, and you can see the volume here on the sides, right here. In this one candle, that's pretty aggressive. And the move was very aggressive from up here, where we got in at 850.5. That's, you know, that's an 8-point move. Too fast. And they're going to retest it. Well, we'll wait. We will wait. There's always a saying, if you miss one trade, you'll recover on the other. Now, if you lost in one trade, now that's an issue. Now then you need to really recover on the other. We didn't lose. And some of you may have stayed in, so you may have picked up a few points on that one. But I'm thinking long from this point. And so I'm going to take the position. As an example, you'll see. It may come down slightly, but not too much. Because they came in with everything they had here. And usually when they do that at the open, it's never a good sign, because that means that they're trying to settle up before they actually move in the direction that they're supposed to go. And in this case, their direction isn't that far down. I'm not willing to take anything. If it goes to 1840, I'll step out of it. But I don't think it's going to go to 1840. And the reason I'm saying that is that as it came down, it's been announcing that eventually they're going to take control, the buyers, but they haven't been able to. And they've been pushing to new lows, and I think this is as low as they're going to get right now. Here's where it gets interesting. Well, this either plays my way and we see the divergence come in, or, and it'll be, it shouldn't be a big trade. That's where it's going to get interesting. That the retracement here should come up, I'd like to say it's around 1846 and a quarter from my entry. So let's see if I'm right. Now, if it goes above and beyond, then it'll come back and retest up here to 1853. And again, only because they came in too aggressively. So we'll see how the volume plays. And there we go. Let's see how far we go. Like I said, sometimes you may miss one trade, but you'll recover it in another. You just have to wait for the opportunity for them to make the mistake. That's a nice mistake they just made. Now see, everyone that would have gone short in that market would have really hated life right now. Because they would have been, ouch, that hurts. And yes, that was a very painful trade. And see the fact that they pulled it off right here. This trade is usually a very good one when they do something this foolish, and it's usually at the very end of the run, which is usually 1, 2, 3, 4, 5, 6, 7th candle. And the 7th candle is when they do make that mistake. And they throw everything at it. So here, even though they're slowly retracing, it's not a big deal. I'm not that lost without it. And see, they've come down too much, so the bulls are going to come in and drive this to try and establish a floor. And we're going to let them do that. We're going to let them establish their trade, their floor, while, of course, we ride on their coattails. Not a bad trade, eh? Right back to where we started, and even higher. So now we're up almost 5 points on this trade. You know, we got in at 1843 and a half. It's trading at 1847 and a half right now. Let's see if it goes to 1848. There you go. There you go. Keep pumping. Consider it like gasoline. You're filling the tank, buddy. You're filling the tank. You're fueling the energy. Can you feel the vibe? Let's see if it pops. Now this is a very aggressive candle, make no mistake about it. But they made their mistake here. So this is them just trying to, you know, redeem themselves for letting the market come down so far. Wow, 848 and 3/4. Whoa. Take it to 1850. Put a smile on our face, why don't you? Oh, 1848, you conniving. Well, that's still not a bad trade. Look at it from this perspective. You know, we're looking at 3 points right now on this trade. We got in at 1843 and a half. It's trading at 1848 and 3/4. If it breaks 1849.50, oh my goodness. Look at it go. Run, 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 Forrest, run. Have you ever seen the movie Forrest Gump? Yeah, we like Forrest Gump. We like when they say, run, Forrest, run. Run, buddy, run. So who went long on this trade? Come on. Say it. Who went long on this trade? Oh my goodness, and it opened up higher. Now here's where it gets interesting, because here's where they could retrace, come back and retrace down here. And normally after a trade like this, you know what? I don't really have much to prove unless, if they make a move from here, and this is where they really need to impress me, I'm not willing to give up what I've already made on them. So at this point, if I don't see it break above 149 in about a minute, then and it broke. Look at that. See, they knew that I was ready to just take whatever they had out of their hides. Now, the next level here, we're looking at 153 if it comes up. That's a big move. That's a huge move, on the S&P. We're talking practically a 10-point move. Do we have the stomach to stay in a 10-point move is the question. Is the predictability strong enough for us? Is the forecast, that we are actually forecasting going to hit? I'd like to say that maybe yes, maybe no, but see, I'm at a crossroads because if you make 5 points on the S&P, you don't have to prove anything anymore to anyone. You're pretty much done. And so at this point, I'd rather take what's on the table than risk any further. See, the one thing that I'm going to show you is that sometimes, and see, look how it retraced. Now, the fact that it retraced is not a bad thing. I'm just not willing to stay in the trade any further. And the reason why is because, number one, it came right back down. Number two is not that it came down. It's that if you make a 5-point trade, you should be very content with that on the S&P. Because sometimes when they move in this aggressively, that means the next one's going to be just as aggressive, which in this case it was. Look at this. It went from 149, it's down to 145. We would have given everything back if we would have stayed in for greed. Greed is not a good thing. Greed is a bad thing. Let me repeat that. Greed is not a good thing. Greed is a bad thing. If you find a trade and you find opportunity to take, in this case on the S&P, 3.5 to 5 points, take your trade and be done with it. Don't look for a 20-point run. You may not get it, especially in these volatile times, because they're trying to repair the damage in the market, but they're not ready to do it quite yet. And so, I think they're going to come right back down all the way probably to 141 and a quarter. And it's not because this volume was negative. No. This volume was bullish to the hill because, see, look at how much bullish volume they had in this thing. This thing opened up right here. This thing should have continued and it didn't. So not because they hit this level and then bounced from it. No, they never even hit this level. That's the worst part. They came close to it, but not even close enough. So, they're still going to be on the downtrend because of the uncertainty in the market, and that's okay. At least we know the floor is at 1841 and a quarter. Now, if they break below that, which I don't think they will, but if they come back down, then it doesn't matter because we've already won. And if you win in your first trade, if you win for the day, here's what you do. Turn everything off and walk away. Don't give it back, at least not in this market. So now we get to go see something else. Let's take a look at crude. Crude is a very interesting animal because, it's one of those that just keeps on giving, keeps on ticking. And I'm assuming that crude came down, and that's what's driving these markets down as well. See, now the commentators on Bloomberg saying, this could be a flash crash taking place. There are no flash crashes, you incompetent, less informed individuals. We haven't had a flash crash in a long time because they've already taken measures to not allow those type of flash crashes. If anything, they're going to, when there is a flash crash, it will be on purpose. So give it a minute. We're going to see, look at that. Crude came down. but not a whole lot. And that type of move doesn't constitute a, tremendous crash on the S&P. Now, mind you, most of the oil companies are on the S&P, and that's not a good thing because they are not having a good moment. They're having a very bad moment. But again, we're not finding opportunity here. We're just looking to see what they're doing. I liked it when I saw oil at around 29.60. I was happy as can be. Now, will it come down to 29.66 again? Not necessarily. Do I care if it does? No, not necessarily. I'm looking to see if there's any relevance to what's happening right now in the market, and there was. They set up for it, oil came down, and of course, that's why we have these other markets react to it. So it's a good gauge. Will they come down any further? Yeah, they're going to drag everyone through the mud right now. It's going to be a bloodbath of the worst kind. So we're going to try and go find opportunity elsewhere. Let's take a look at the euro. Let's take a look at FX. FX is always a beautiful thing. See, look at that. The Dow on the cash market is down 265 points. So I hope you enjoyed that trade that we took. I told you it wasn't going to be a big trade, but it was going to be just enough to put a dent in their projection. And now it's down 276, the Dow, 4 points down on the S&P. Ouch. Talk about hurt someone. Yeah, believe me when I tell you there are men shedding tears today, but they ain't you. Okay, so now we see the euro in play to the upside. But here's where it's going to get really... See, this isn't the trade that I was looking for on the euro to the upside. And this one has negative volume. Now there's a pivot right here. And there are power dots right here. So this level right here is not a good one. It's actually a bad one for them. But let's mark it because we're such nice people that we want to see them make that mistake. Now the problem with this trade is very simple. Let me explain it to you. It already happened during the European session. I don't expect a tremendous move to the downside, nor do I expect a tremendous move to the upside. They've already made their play. From 110.89 to 111.30. That's not a bad trade. That's, practically a 40 pip trade. Will it continue is the next question. And so normally I like to see this in a higher time frame, a 15-minute. FX is a little different. Thank you. Thank you, Ben. See, Ben has a nice comment. Says, very nice. You're the real deal, Mr. Ricardo. I appreciate that. So now we're going to look at something even more interesting. And this one becomes interesting because the beautiful thing about trading is that you don't have to be in the trade all the time. Like I said, you're going to find opportunity in one where you may not find it in the other. Now here, for instance, this is where it becomes interesting because here I like to look at this here and I like to go back and see how did they trade this price level. Did they break through it? Yes. And when they broke through it, was it aggressive? Yes, it was. Now, it served as a resistance level as well as a support level. And we want to see that play. Let's see if we see any further here. No. Okay, so let's bring this thing back. Okay, now we know that when they break above it, it's going to make a run like no other. However, let me show you where the problem lies in their mistake. And their mistake is very aggressive here. It's a very bad one, actually. See here, they said go long, which they did. They went long. Here, this is a bullish candle with bearish volume. Let me explain why. So here's the volume. See here, 283 million on the buy, 255 million on the sell, difference of 28 million. Bullish volume. This one 268 million on the buy, 338 million on the sell. Difference of 69, which is negative volume. Yet it continued to go up. They continued to press it. Difference of 59 million here. More importantly is that the message here is we're looking for consistency in the message, and we're not finding it. We have basically the buyers and sellers point of control at the top of the candle. Here they're in the middle. Here they're in the middle. Here they're in the middle, which is a good thing. Means that the sellers eventually are going to come in and take control. Here they do the same thing, but they pop. They throw everything at this. 589 million on the buy, 552 million on the sell, difference of 37 million. Now, granted, there are pivots here, and they've been playing this trade, but I don't think that this trade's going to play too much because they needed to break above this level to really rock their world, and they're not rocking anyone's world to the upside right now. Now, as crude is going down, the dollar gets stronger. That is normally the case. So here, I would say, in this case, we're looking for a retracement. And it's really not a retracement, it's really a correction. This was the retracement. I'm thinking that from this point, we're looking at a trade to the downside, and you're going to see the volume divergence go this way. That's how you're going to see it. And basically, as this is going up, this should be going down. Now, here, there was divergence to the upside. So it was in play, no problem. But I think that it's over here because the volume here is negative. Let me show you. And when you have a candle with negative volume way at the top, like this, that's not good. That's actually a bad thing. When we have a bad thing, then that means usually it's a wrong direction. But it's not there yet, so we have to wait for it. No jumping in prematurely. Let's just let them play their trade and wait for the opportunity. I think they're going to give it to us, and when they let it set it off, it'll be one of those. Because see here how they hit this level and retested it. See here, it's a perfect example of a resistance level and support level. Now, if they break above it, then they got to come back and retest. So we're not sure yet. It's still one that's in motion. So let's give it a minute and let it play. Meanwhile, I will be right back. Okay, now we're back in play. Now, everyone would normally say, go long. I'm not. I'm saying, wait, let them give it up. We're almost there. Not quite, almost. It's coming, it's coming. Give them time. I'm thinking short, not long. But let's wait. And as an example, we'll short it here. So let's see how far we go. Now, I'm not willing to give up more than 15 pips on this trade. So if my entry is here at 1132, then my stop loss is at 111.44, and that's where yours should be as well in a trade like this. Why? Because if they were to break, it would be very aggressive, and if they don't, it means it's coming down. I'm thinking dollars, more strength on the dollar, but they're going to try and play it the other way. Now we've already made a good trade this morning. You know, this is more of an example, so I want you to see it as such, as that. Let's give them a moment to play their game, which I don't think it'll be a big game, to be quite honest with you. Because they would have done it by now. So we have 1, 2, 3, 4, 5, 6, 7. 7 candles. I like the number 7. This number 7 plays well with me. Because even if they had an 8th one, that would be the last one. Now let's see. See, suddenly I'm only down 1 pip after being down 4 pips. This ain't over. They're still in play, but there's still divergence to the downside, as you can see. And there is an imbalance, which is in play. They announced it here. This is an imbalance of the worst kind. And why is this? Because the seller's point of control is up here and the buyer's point of control is below it. So here, the buyers are saying, hey, I'm done rebalancing my risk to the upside. Guess what? I'm going to let you take control just like you've been planning on doing so. And then here, of course, they confirm, you know, the sellers say, hey, it's get ready. I'm coming. And once that happens, and when they did it here, they showed the imbalance with a tremendous amount of high frequency trading right here. And that was the problem that they had. Big, big problem. You know, these are little clues and little details that most people can't really see, and they don't look at them because they get too caught up in the emotion of the direction of the trade. You've been long the euro since 951. Oh my God. Well, I'm happy for you, buddy. You should hedge it now because it's going to come right back down. So from this, you know, from this point, from 109.51, so you went long here. 109, no, 109.51. Right here is where you went long, actually. Okay, yeah, I'd say take your money and run. That's a good trade that you took. So now, see, now suddenly we're positive 2 pips when we were down 4 pips and everyone was thinking, long, it's going long. Well, no, their assumption was incorrect because they couldn't see the volume divergence. And see, normally you'll see the volume divergence kick in 2 candles once they're at the very top and they're going to basically change directions. And this is basically it. This is where they did it. Then they pulled back, they held it. Remember, you know, we are trading with information that normally most people can't fathom to understand. Not even close. Where now you have information that actually gives you insight as to what their next plan of action will be. And that makes a big difference when trading Forex, specifically Forex, because everyone says, you know, Forex is impossible to trade, you know, that it's rigged. And you know what? To some degree, they're right. They're not mistaken. Here's a problem that I have with that statement. They say it because they have incomplete information and they're using technology and indicators with outdated mathematical formulas that can no longer fit into this new realm of digital warfare, because that's what it is. This is a game of chess. And in a game of chess, if you haven't learned to play chess, you need to read a book on it. You know, my father taught me when I'd like to say 9, 10 years old. No, I think it was smaller. I used to see him play chess with one of my great uncles, and I was about 5 or 6. But they didn't teach me how to play chess until I was about 9 or 10. And the reason why they taught me how to play chess was they taught me that you have to be able to think 5 steps ahead of your opponent in order to win. Well, they taught me to think 10 steps ahead of my opponent. So everything that we've designed here is to be 10 steps ahead of the market makers. And that's why you're seeing such consistency in our trading now, because we are out of beta. We are no longer in beta. We are on the road of taking everything they can give and eliminating mistakes from our strategy to try and make this as clean and good as it can get. And so now, you know, we made a 5-point move on the S&P, and I'm thinking that this should be a good 15 pip, maybe 20 pip trade to the downside, if not more. Don't expect it to go down significantly because most of the liquidity is in the stock markets right now. However, I'd like to say we're going to have at least 2 candles, maybe 3. So here we still have another 9 minutes in this candle. Now, if this candle comes in very aggressively to the downside here to 111.13 from our entry 111.32, that's not a pretty bad trade. You know, that's practically a 20 pip trade in one candle. One can't ask for more than that. So I'm not showing you guys how to find these small trades. No, I'm showing you how to identify opportunity. That even when after a big trade has taken place, there's always opportunity for the smallest to take place, which allows you the opportunity to win. Now, we should have seen more action in this, and I hate when they do such a thing, but once they begin their run, it's usually, let's see this. See, this one had negative volume. Look at that. Negative volume. And this one, less volume. No, this one had more volume, so they threw everything at this, and they pulled back and had negative volume. So this candle right here, if you would have seen this candle just by perception alone of your eyes, you would have said, this is going to go long. It's going to break this resistance on one run. And then they would have caught you and taken you and had you by your chinny chin chin, and you'd be in prayer right now, prayer mode right now, saying, oh God, please forgive me. Bring the trade back in my favor. And we don't have those type of discussions here. Those discussions, nor do we bring God into the equation, because one must be accountable for one's mistakes. You're long, you're still long. You're out 30 pips, good for you. See, this is one of my students. He made 30 pips on this trade. He took it long. Really? Give me 1 second. Can I get back to you? 1 second, guys. Don't go away. Thanks. Very good. So, getting back to this. See, now we're back to 1 pip. So they made the pullback, held. Normally I'd say stay. We haven't lost anything, but they're going to play this game. What type of volume are we looking at? I mean, they've played this thing pretty aggressively. Look at that. 287 million on the buy, 278 on the sell, 281 on the sell. So they're fighting for control pretty aggressively. Now, was there a pivot here that I missed? And that's the next question. Was there? There was right here. They hit this thing, they didn't break below it. See, the pivots map out the next level once they initiate a trend. They didn't play it. Now we're down 3 pips again. Now, if they break above this, then I'll get out because I'm not going to give them much to play with in this regard. But again, this would be the final candle, though. You know, they've made a pretty big move here. So the fact that they're throwing the kitchen sink at this is also interesting. Let's see how it plays. I'm curious at this point. Yeah, see, I'm not willing to play this game any further. It's one of those where, now I know that they're going to come back and retest it, but they're going to retest it. If they don't break below this, the retest will be a nasty one to go long. So let's see if they give it up and fail. Now what they could have done here is actually come up and, oh, I see, here's the resistance right here that they've held, and right here. So give it a minute, give it a minute, give it a minute, give it a minute, give it a minute. They are not happy with their decision, but I'm not happy with mine either at this point. And so when you have something like this and they give the opportunity to get out, guess what? Oh, now, see, they'd really have to push this down now very aggressively. No, they did. They went up and then they came right back down. So here, they still have 4 minutes in this candle. Let's see. If they come back down, which is what I was expecting them to do, then the next one should come in more aggressively and really push it down. So let's see. This ain't over yet. 3 minutes left. And if they bring it right back down, see, we're not giving anything up. Far from it, we're going to take from them. But they like to, in Forex, you'll find that normally they'll play this game where they will spike and do a head fake, and it'll be the final run before they actually give it up. Now here, the volume dropped, and this one didn't really drop much. It actually, but it was negative. Here, there's a good one here. So this is the one where they threw everything at it, and this one there was a reduction in volume, and this one here, they're throwing everything at this, which is not a good thing. And we have 2 more minutes. So if it comes down, and they're trading below these pivots now, if it stays below this pivot, then at that point, we're in good shape. And that pivot is at 111.29. But it has to close there in 2 minutes. If it doesn't close there in 2 minutes, then this trade is done for us. And then we need to just exit the building. And it ain't playing fair right now. And it's right before, yeah, see, it's not going to play. What they're going to do is that they're going to play this little game to try and trap people right before the close of the candle. I hate when they do that. So let's give them a minute, because they have a minute left. And in that minute, a lot will be disclosed. Especially the amount of money that they pushed into this, which is quite a bit aggressive. Now, if this is a bearish candle with bullish volume, I'm out. I'm not even going to think of staying, because let's assume the worst in the next candle when that happens. And it is still playing. I don't like. Make me happy, or I will run. No. See, it's still a bullish candle with a bearish candle with bullish volume. Unless it becomes bearish, yep, there. We do have a power dot, but not interested at this point because it's not going to play. It's actually going to go long. So sometimes it's better to get out of a trade than to lose. That might be a doji sitting up. No, there's no doji there. That's a power dot right there, but it's in the wrong place, which I don't like. And so see the aggressiveness of the trend dots and the fact that the trend stop formed here, not a good thing. The reversal here will be short-lived, won't be aggressive. We needed this candle to be aggressive to the downside in order for this one to fulfill and come down further. It didn't do that. Because it didn't do that, you have to know when to walk away from a trade. Did we lose? Not really. Did we learn a lot? Yes. The answer is yes. I'd rather learn from a mistake than continue to make that mistake. Yeah. See, they're going to play everyone to go long because they're going to use the trend dots to go long. And then they're going to break. But there's not enough liquidity in the market to put a smile on my face right now. And the fact that this formed here is not a good thing. See how it's breaking to the upside? That's why I wasn't that keen on it. When they settled here bullish, with bullish volume, I said, no, 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 not a good thing. So divergence has shifted. Well, it was a good run, I have to admit. Can't win them all, but you can't lose either. Making a mistake to lose is not a good thing. Making a mistake to win is a better. But here, remember, this was a bullish candle, and it's inverted again. But they're not playing fair right now. And so they're going to break above. Now, they'd have to really break above this level, 111.43. And that's quite a bit of ways. And with the lack of liquidity in this market, at least in the foreign exchange right now, I don't think there's any opportunity for us there. So no, no, no. That's a no-no. Let's take a look at one more. The US Swissy looks like it's in play, but it's the same thing as this one. See, look at that. If we would have stayed in that trade, we would have been doomed. See what I mean? Information is key to your decision process, even in getting out of a trade. Imagine if we would have stayed in this trade short, we would have lost because our entry was here at 111.31. Suddenly we'd be down right now 10 pips. And remember, I told you my risk in this would be no more than 15 pips. I just didn't see the, no, we got in at 11.32. Yeah, we still would have been done right now. It wouldn't have mattered. Now, being that said and done, there's a lesson in this that you can forecast a trade, but if it doesn't go in your favor after a specific amount of time and they demonstrate that they're not going to play fair, then exit the arena. It takes two to play chess, remember that, or checkers, doesn't matter. If there's only one person on the table, there isn't a game. So you have to know when to walk away from that game. There's no game here right now. So let's go take a look at something else. Maybe we'll find, let's see. Let's take a look at the pound dollar. Maybe that one's playing a little bit more fair. Give it a minute. Almost there, almost there. Not too bad for a morning. We had a good trade, and then we had one that had potential but didn't play. Now, this one looks a little bit more interesting. See, this one's been on the downside for quite some time. More importantly is that as it was going up, they overshot themselves here, here, and here. Now, this is a bearish candle with bullish volume. Not a good thing. But there's a lack of liquidity in this market right now, and that's why we're not seeing a lot of action. Normally, they're very nice about telling us which one they're playing. Seems like the US Swissy is one that's maybe in play, but I would have expected a little bit more off of this trade, and it's just not there. And see, you don't have all the elements here. We don't have power dots, telling us to go short, because we don't. We have a pivot saying they've reached this level, and if it breaks above this one, then they've got to come up here, which is not a good thing. I mean, that's a pretty big range there, and vice versa here. So I don't like to be in a trade where it can go either way. I don't have enough information. It's not a good trade. Walk away. Let's take a look at Let's go back to the futures. Let's take a look at the Dow. Yeah, we have to have all the elements in the trade. If we don't have all the elements, then there's no trade. One must know when to walk away. Now here, of course, it's a little different. They've come down crashing, and they continue to crash. Wow, what a crash. I mean, they went from 16,193 to 15,790. Now I've been predicting for quite a few weeks that we were going to go down to 15.5. I just don't think they'll do it today. Today isn't that day, but they're going to make an attempt. I think that they've come down as far as they're going to come down. Any more would be tremendous bloodshed. I think there just might be an opportunity for a retracement right back up. Let's go to the 5-minute and see if we find that. Yeah, see, 337 points down on the cash markets, and the Dow is not a good thing. That's a bad thing. I'm telling you, there is blood in the air in the markets, and they don't know what to do. They're all saying this is a see. Yeah, I knew they were going to pop, but we missed it. It's too late. This is where it occurred. See the divergence right here? They threw everything at it on this one, even though it was coming down. When you have this effect, that's the beautiful thing about what we do, is that we're able to see this effect take place. And when we see this effect take place, we confirm it with the numbers. And it's just a beautiful thing. So here, for instance, here's a volume divergence this way. See this picture? This picture makes no sense. None at all. You have volume going up and you have price action going down. There is a trade to the upside on this actually. They're actually going to retrace because they can't. Oh, man, we missed the entry. See, we would have been up 10 points right now in this trade. They're going to bring it back up. I'd like to say they're going to try and attempt to bring it back up at least 100 points. Now, if you know the risk of the trade, then there's no excuse for you blaming anyone but yourself to take that risk on. I choose not to. I'll tell you why. I don't have power dots. here. I do have volume divergence. There's no pivot here in sight. And see the aggressiveness of this right now? At any moment, they can use the trend dots to come down. See, that's why this candle is somewhat dangerous, because if it doesn't break, I would need this one to break aggressively above this and this. And I don't think it's going to pop. I think they're going to bring it right back down. And that's a crying shame. So no, I think we're done for the morning. Are there any questions? Well, sounds good. I'm glad that you guys enjoyed the morning. I've enjoyed sharing it with you. We found a good trade at the beginning. It was nice. It was simple. It was exciting. And no one saw it coming except us. And now, of course, everything is over and done with, and it's time to say goodbye. We will be back Friday morning, same time, same place, 9 a.m. Eastern time. And we will, for those of you who signed up for the European session that have the software, we will be doing a European session this Thursday from 2 a.m. to 4 a.m. Eastern time. So I wish you a very, very good week. Happy trading, happy hunting, and I'll see you Friday morning. Have a great one. Thank you again for joining us here at Phoenix Trading Strategies. For those of you that have any questions, you can email me. My email is ricardo@phoenixtradingstrategies.com, or you can give me a call. Telephone number is 818-431-1357, and I am located here in the United States in California. Have a great one. Take care. Look forward to seeing you again this week. Bye-bye now.